What is up, YouTube? This is the Working Investor. In this video, we are going to talk about the announcement of Roundhill of their crypto fund. We're going to compare YBTC from Roundhill to YBIT from YieldMax, which are two crypto income funds, and they both used to be based off BITO, and they're going to be based off of IBIT. And we're going to compare BITO to IBIT and YBTC to YBIT. Let's start. Let's get into the video. So we'll start with the announcement and we'll go from there. So Roundhill had this announcement, I got this in the email, that they're doing two changes to their YBTC fund, their income fund, their cover call ETF income fund, which they used to write cover calls on BITO or BITO, which is they write future contracts and they give distributions in itself, and then they would write calls on the future contracts. So they're going to be moving over to the spot price of Bitcoin, which is IBIT. I've already seen it in their holdings. And they are going to join the rank of only 8 other funds out there, income-based funds that pay weekly. So this is going to be the 9th fund that's going to pay weekly, and it's going to be starting in, looks like, January 2025. Let's get into the video. So from BITO and IBIT, which both YieldMax's fund and Roundhill funds are doing options they're moving over to IBIT. What's the reason? So let's look at expense ratio and let's look at total returns of BITO and IBIT, the underlying, and then we'll look at total returns of YBTC and YBIT. I know they all sound like a tongue twister. So BITO, like I said, everyone's moving away from BITO because BITO did future contracts, and BITO has an expense ratio of 0.95%, as you can see over here. And they came out October 18th, 2021. Now, if you go to Market Chameleon, it says that BITO has implied volatility, 30-day IV of 60.9, which is very similar to IBIT, which is 61. So they're about the same when it comes to 30-day IV. And BITO is from ProShares, and IBIT is iShares, which is BlackRock. And if you go on their website and you go to fact sheet, you could pull up and see some more information. And you could see here that they're much less expensive. Instead of a 0.95% expense ratio of BITO, IBIT, which is the spot price of Bitcoin by BlackRock, they have something called a sponsor fee, and it looks like it's going to eventually be 0.25%, 0.25%. There is a 12-month temporary period. They came out January 11th, 2024, so we're already in December of 2024. So they're really, right now they're on discount for around 12%, 0.12%, and they're going to eventually, this is where they're really going to be by 0.25% eventually. So they're a lot cheaper to do, and they talk about liquidity. They go into their, they try to sell you on the pitch that they're much more liquid, so the real thing for me, all of this is my personal opinion. This is not financial advice. Look at all my disclaimers. But I looked at Seeking Alpha, and I want to compare the total return of IBIT to total return of BITO and the total return of Bitcoin. And I need to use the same dates. So I looked at the fund that came out the most contemporary fund is IBIT, which came out, like I said, January 11th, 2024. And using Bitcoin to US dollar as the benchmark, you could see that I put in the dates from January 11th, 2024 to today. And we're going to use the benchmark of Bitcoin, BTC to US dollar, and it's 137.79%. And let's see how close IBIT came to matching the 137.79 in total return. So here you could see since inception of January 11th, 2024, they didn't get the 137, but they got 117. They captured in total return 117.46. They don't really have a dividend or distribution like BITO has, but they have 117.46% in total return. Let's look at BITO that has a distribution, what their total return is in this exact same time period. So you could see in this exact same time period, from January 11th, 2024 till today, it's 105.19%. So clearly you see that IBIT, even without distributions, is the winner this past year when it comes to having a higher total return, closer getting to the 137% total return of BTC to US dollar. So when a cover call strategy is based on an underlier that has a higher total return, 117 to 105, that's about 12% greater total return. I would hope that they possibly will get a higher return because they're using an underlier that has a higher return if they write their calls, their option calls correctly. And also, as we see, IBIT is a lot less expensive to trade. 25 basis points versus 95 basis points. So it's a lot less. It's almost like 25% of the cost. Now let's look at the underliers of let's look at YBTC versus YBIT. So you could see here that YBIT from YieldMax came out, launched April 23rd, 2024. Since that time, it lost over 30% in price. It does pay dividends. So the total return in this time period of April 23rd, it only netted 8.46%. In this exact timeline, YBTC, we'll take a look, captured more than 8%. They captured almost 32% in this timeline, multiple times over. And their price return is not negative. It's actually maybe just a hint positive. So they've kicked their butt. And YBTC and YBIT were both writing options on BITO, and now they're both moving over to IBIT. So we'll see how they do it, but whoever's writing the options on YBTC seems like, in my opinion, because of this data, that's why I have my opinion, doing a better job. And one cannot overlook the weekly payer, because until now, there only have been 8 options that I know of income funds that pay weekly. The 3 option funds from Roundhill, which is XDTE, QDTE, RDTE, which is on the 3 indexes of the S&P 500, the NASDAQ, and the Russell. And then you have here the Defiance funds, which is the same 3 underliers, WDTE, QQQY, IWMY. The Roundhill products, they do at the money, slightly out of the money, but really at the money cover calls on the daily. And then the Defiance funds, they do in the money puts on the daily, 0 day to expiration, but they have some flexibility in their verbiage. And then you have YMAX, the 2 funds from YieldMax, YMAX, which is all the cover call funds that YieldMax has, and then YMAG, which is the Magnificent 7 from the YieldMax funds. And now we're going to be having, I think it said from July 2025, coming up next year, finally a 9th fund, and it's from Roundhill, YBTC. So the question is, how are they going to be making these payments? Are they going to because IBIT, I don't think they have daily covered calls, daily options. Let's take a look. So going on Robinhood and we're looking at option trades, trade options. Yes, they have, wait, December 20th and 20. Yeah, it makes sense. So it's pretty much weeklies. So they have weeklies. So the question is, I've never seen a fund that pays weekly that doesn't have daily options. For example, the index funds, the S&P 500, the NASDAQ, and the Russell, they have daily option change because there's that much volume. But IBIT just recently, they used to only have monthly, and just the past few weeks, they switched over to weekly. So I wonder if they're going to use all the proceeds that they do on the trading of 4 weeks and pay it out the following month and distribute them in quarters over 4 weeks? Or are they going to do kind of like, I guess, what they do in their other funds with Roundhill, where they just pay you whatever they make 1 week, you get paid about 2 weeks later? Or YieldMax, YMAG, they pay you a week later. So I don't know how it's going to be. Like, are you going to see 4 weeks the same payment and dividend, or are you going to see variance that reflect 2 weeks or 1 week prior? Time will tell. We will see how they run these funds, but it's going to be interesting. Anyways, this is the Working Investor over and out. I hope you guys have a wonderful trading week and a wonderful weekend. All the best. Be well.